I've had to hear you say the words orange chicken at least 100 times today. Never want to hear that word again. I don't want to see any more pictures of orange chicken. I don't want to hear about your oil. I don't want to hear about how many pounds of chicken that you fried and how many batches it took. I've been listening to this. I had to listen to you. Actually looked. The chicken looked pretty good. Well, I didn't see it glazed, but
it is fully glazed now.
Yeah, why don't you pop a fully glazed in there for all these perverts will. Yeah, we can hear you now.
Oh, okay. My fucking Discord updated, like a Windows update, just closed itself.
Nice. That's how you know the quality of this is just going straight through the roof.
It's kind of terrible, actually. Fucking me too. Who's raising his hand first?
I hope everybody's ready.
I already know. He's already sent me questions. He's like that student.
He's like that kid in the front of the class who's like got his hand in the teacher's face. Like, pick me.
He's no. This is, and you can bring him up to here so I can tell him to his face. Yeah, he's the student that comes. He's the student that comes to office hours in the week when there's no assignments due. When you're just like, I need this hour back, so I'm going, like, nobody should show up. There's nothing due. They should be thinking about other things, and they're just showing up just like, hey, I was thinking about this, and I was wondering what you thought about that. And you're just like...
Jay Fresh, I have you know, during those weeks, I was playing golf.
All right.
I've talked to him he's also deeply autistic.
Thanks.
Okay.
Coming from you guys, I mean, that's like a compliment, right?
Okay, undiagnosed here. Undiagnosed.
Yeah, we don't want to get him on any lists.
I feel like this should be offensive. It's not something you can just do.
Wait, what? Say I'm neurodivergent?
Say I am. I'm neuro something. I don't know about divergent.
Didn't you build a mathematical model to try to prove me wrong one time?
Huh? Probably. I don't know.
Okay.
Like more than once, probably.
Yeah, that's a few times, I think.
Isn't that kind of Jay Fresh's shtick? Is the
mathematical model I built? The mathematical model I built predicting the death of Superstonk was pretty spot on and awesome.
That was great. They're still there though.
Yeah, but they're at the size I thought they would be.
Yeah,
they've lost critical mass. I think we'd all agree that there's no hope for whatever that was anymore.
Jay Fresh, do I need to go into our DMs and read what I wrote? Because I totally don't have it memorized.
You can or I can. Sure. Why don't you read your question?
Okay, let me figure this out.
Let me be very clear. This is not an open invitation to DM any of us.
Yeah.
Okay.
All right. First question. Please describe how the Gammastrike implied move differ, and those calculations differ from the simplified calculation of VIX divided by 16.
Yeah, okay. So should probably explain where these equations come from.
Are we doing
so
the rule of
why
16?
VIX? Yeah, I mean, it's VIX divided by 16 is approximately VIX divided by the square root of 252 for people that don't know. Because if you were unaware of what these volatilities are actually telling you, they are the expected or the implied move over the course of 1 year. So a VIX of 18, for example, says that they expect volatility to be something on the order of 18%, plus or minus 18%, to one standard deviation right, over the course of a year. So to get it to be the expected move of a day, you divide by roughly, you divide by square root of 252, which is the number of trading days in a year. And that gets you the expected move in one day. So, and that square root of 252 is roughly 16.
Yeah.
So that's where that comes from. So now the question is, why is the VIX different from the implied move? And that comes with, huh?
No, I was
You
gonna
want to
say, I
answer
know
it?
the answer.
Oh, okay.
Because
Well, that comes in. That comes into how these things are calculated. So if you notice, there's a volatility smile, right? The volatility is some value at spot, and then it grows as you get away from spot, right? And so what that is telling you is that the position at the money there's an expectation that from spot, it's probably going to move this much. But then there's an expectation of like, as it moves away from spot, the probability that it will keep moving in that direction grows. And so it's kind of an effect of that. So the expected move that we calculate is from spot. So it's taking that smallest IV and propagating those things forward in time to figure out roughly where they expect from spot this to move. Now, that doesn't mean that if you actually get that move, or heaven forbid more than that move, that their expectations aren't going to change, right? As you move out, they've priced things to be able to handle those fat tail events where if you get a large move, you might get an even larger move. And so the VIX captures some of that curve on the IV. So if you actually can notice, if you go and look at like the IVs for a chain that's roughly 30 days out, if you look at the at the money IV, it'll be a little bit smaller than the VIX pretty much all the time. And it's just a function of how it's calculated. It's calculated incorporating the volatility, the entire volatility smile, and so you get some of those higher volatilities baked into that sort of average. So the VIX is more of like an average volatility of volatility. It's kind of a strange way to think about it.
Hold on.
Yeah.
There's like another reason for that, right? It's because VIX isn't a measure of volatility. It's a measure of a variance swap on SPX that's annualized and expressed as an implied standard deviation.
Yeah.
So it's the market's expectation of the average squared return over the next 30 days.
Yes. Yeah.
Yeah.
But that is a little bit different from the expectation of where things will go today from this spot. They're slightly different things, but they're usually the VIX is like 5 or 10% higher than at the money IV.
Lately, it's been substantially lower than the, but yeah.
Oh yeah,
That's
so
what
yeah.
my
Well,
second question will come in.
you've got to look at the expiration, right? Maybe ask your second question before I keep going.
Well, I mean, you still haven't gotten into like where the Gammastrike calculations are differing from the simple calculation.
No, we have our own calculation that no one's supposed to tell
I
you
know.
about.
Oh, okay. Well,
Basically, we're not calculating it from VIX.
okay.
Yeah. You're talking about expected move, right?
Yeah.
No, expected move is made from IV.
So, I mean, the way to think about our expected move, without going into too many details that makes Gherk mad.
Yeah. No. Don't share IP.
I mean, IP, whatever. But anyway. Basically, we are giving you an expected move that doesn't as heavily weight like black swan events. So it's an expected move that you're more likely to see on a daily basis.
Okay.
I think that's probably the easiest way to say it without just telling you what it is.
Oh, okay.
No,
so I got this.
Oh, go ahead.
So The implied move is basically like a good way to think about it is a bell curve. You know, one standard deviation. So the implied move is basically telling you, hey, you know, these are this is the one standard deviation bound, right? So inside of it,
I
the
got.
market's pricing like an 86% chance of being in those bounds. Doesn't mean that it just means the market's pricing that, right? But yeah.
Sorry, Dork,
So,
for JFresh's explanation that you're calculating it off of IV and not VIX makes more sense.
okay.
It's okay. He tried, and he's not wrong.
He's not wrong. It's just that's not what I was asking.
Anyway, he's
Okay.
It's just so not as good. That's all.
He's chest deep. He's chest deep in orange chicken right now. He's delirious from
Fuck
sugar.
yeah, I am.
Did you see the
Okay.
quesadillas that I made and I thought of you, Dork?
I did not. No, I need to see them.
And I tagged you. You also
I had
have to
a,
go look at this.
I had a
If he did it today,
burrito.
we've been like, oh,
No, I just
You're
used
getting
bolts
so
and
hard.
arrow cheese.
Oh fuck.
Yeah.
I had a
It's
burrito
addictive.
You dick.
pizzeria, and really what that was is a giant quesadilla. Like that, they made like 24-inch tortillas and then just filled it with burrito meat and cheese.
Oh, jeez.
And then
That doesn't sound wrong in any way.
it was amazing. And it fed like 3 people.
There'd be like 5 dorks.
Yeah, and then, like just like a bucket, like an actual bucket of consomme to dip it in.
Okay, second question. This one's, I think a little more interesting at least. So, Grant, I wrote this 2 days ago, I think. So VIX was still over 30 at that time. It appears SPX auction pricing lately has come down, specifically 0 DTEs. When I wrote this, even though we remain in a high VIX environment, greater than 30. Can you please explain how current HV and IV levels are affecting SPX options pricing and what this might mean for price action going forward?
yeah. So this might be time. Everybody, get out your Gammastrike websites and go to the vol page. But if you take a look at, so one thing he's talking about is basically looking at like IV30 versus HV30 and IV10 versus HV10. So the first thing to note is that IV30 and HV30, if you look at those two, so HV30 is significantly higher than IV30. So if you notice, there was actually a spike in IV30 that then followed a spike in HV30. So like this big spike in options buying basically created some of this volatility that actually then was realized. Then everybody said, oh, volatility is really high. Implied volatility is really high. Volatility is mean reverting. I'm going to short the shit out of options to try to capture some of those sweet premiums, because I know that there's a high likelihood that realized volatility is going to drop and those people are going to lose money on those long options that I sold them. And so what you see here is that, now IV30 is down at like 23-ish, and HV30 is still at 42, right? And so if HV30 remains 42 for, IV's been underwater for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So if HV30 stays this elevated for another 20 days, like all of the short vol positions in here are going to blow up, and they're already kind of in the process of blowing up. I know Gherkin and I have been discussing how much squeezing is going on right now, at least in short vol. Right now, a little bit more to the upside than the downside, but I think some of that squeeziness is already starting to play out. Then you look at something like, IV30 versus IV10. If you'll notice right now, IV10 is only about 24 versus IV30 is 23. Generally, they track somewhat similarly. IV. So I mean, this is actually a little strange because when people aren't shorting 0 DTEs to hell, the shorter term IVs are generally higher, and they drop as you go outwards, and so the fact that IV10 is so close to IV30 just is another indication that people are shorting very short term option volatility,
Very heavily.
which is distorting this. And okay, so we get this idea that volatility is now underpriced. It's underpriced at the 30-day and it's underpriced at the 10-day. So now if you just show IV10 and HV10, scroll, you can actually see that, okay, so with the data that just came in tonight, actually, if this is to be believed, which it likely is, something rolled off from 10 days
It looks
ago.
like the 10-day tail to the 9th, which was the big Trump tariff shock, I believe.
Yeah, so it looks like here actually that this tells the story that short vol might be winning this war right now, which I mean, if you look at price action, it does seem like we are starting to stabilize. So short vol is definitely getting a foothold here. And that's starting to show up in actual volatility. So right now, actually, volatility on the 10-day is only slightly underpriced, at least relative to realized volatility.
So
Um,
an important thing to note about HV10 just really quick is like if a stock gaps up 5% or something and it normally trades in like a 1 BIP range, you're going to see HV10 spike up really high for exactly 10 days.
yeah. But that's always a risk, right? And this has been a long-term trend, especially since everybody and their mother's been shorting vol for so long, that, all of these dips are going to aggressively reverse and revert. But if you if you look at like the history of how this has been going, I mean, this was a major event, and I don't think that all of the realized volatility has been shaken out here. I think this is a little bit of a head fake, and people are just piling in because that's just what they've been Pavloved into doing.
It's mean reverting,
Uh,
bro. Free money.
well, everything looks like it's mean reverting when it's moving to go the other way, right? Volatility
I
means
know.
big swings up and down, right? So just because it's swung down really hard and now it's swinging back up doesn't necessarily mean that it's returning to a lower volatility level. It might just be swinging the other way, and you're just sitting in this.
HV10 returned at 30%. I mean, like it's still really high.
Yeah, I mean, you're still sitting in the eye of the storm, right? So you could swing right into the other arm on the other side.
Yeah.
So all of that to say, why do my IVs look suppressed here? The first question is IV high or low? I think I've kind of walked through how I think about determining whether it's high or low. And then if IV is underpriced, where is it most underpriced? And that was kind of that discussion of comparing like IV10 to IV30. They look fairly similar here. I would expect in general the IV10 to be a little bit higher than the IV30, a little bit higher than now. We actually have some stuff that we're developing now to kind of look at like where on the volatility curve or the volatility surface where short interest seems to be accumulating, and definitely it is accumulating right now at shorter dated contracts as people are trying to short the event vol. So all of those effects are showing up in the IV in those ways.
Yep.
And in my opinion, I think vol to the upside is ever so lightly squeezed a little bit today. I mean, it certainly wasn't massive and it wasn't out of control, but there was a little bit of capitulation on the positive.
Yeah,
On the short call side,
I think it was the price action was just muted. Well, first of all, there was a condor at 45.50, like a bear call spread, big fat one, and I got pushed in the money. And then also there was a ton of positive delta to the upside this morning, like on the 0DT already. And I think that acted as like a resistance to the short vol squeezing harder. And that's why we had such a grindy fucking upside day.
There
Like,
isn't as
we
much
just sit and
positive.
struggle with each strike for like fucking 10 minutes and then gap and then struggle with the next one and then gap.
yeah, this is actually a great point. If you don't mind, I would like to springboard a little bit off this to talk
Yeah.
about something else about that position. If you go to options macro,
Oh, it's my
and you go to
favorite
our
place.
handy dandy leverage chart,
Mm-hmm.
and you look at the call leverage,
Yeah, this shit.
yeah, on the right,
Yeah.
and you go to pretty much right where spot is now, or moneyness of 1. You'll notice that this is a peak, a local peak in the call leverage.
Mm-hmm.
And above this point, as moneyness increases above 1, call leverage starts to drop off dramatically. What that tells you is that as we start to move up from this point, contracts become more and more and more in the money, and so their leverage drops, which is telling me that there's not a whole lot of positioning above this point, call positioning above this point, to try to rocket us higher.
Yeah.
Now, if there are a lot of calls up above this point, I have to go and look. And this is the entire market. This isn't just the index. This is aggregated for the entire market. But if there's a bunch of calls sitting way up above us, that could be an indication that, there's a lot of short calls there that could be ripe for a little bit of a squeezy poo. Which is a technical term. You should all start using that, squeezy poo. It's like a little squeeze to the upside that, anyway, it's a squeeze. But if there isn't really a lot of calls up there, then what that tells us is that there's not a lot of fuel to keep us pushing higher. And then if you look at the orange line, which is put leverage, put leverage is highest about 3% below us. So that is where a lot of the shortfall has been repositioning itself. If you've noticed, the shortfall the put leverage has been climbing over the last few days. So a lot of people are trying to pile back into that shortfall, that short put trade, as they believe that everything's going to be stabilized and all the tariff stuff is going to unwind and amount to little, right? And so you can kind of see mechanically all of these signs that everybody, it's like the ship zagged and everybody zigged to the other side of the boat to try to get it to turn the other way. And right now it's about level, right? They're getting it to turn back to about level. And the question is it going to just turn the other way onto them, or is it going to steady out? And that's remains to be seen. But everybody's expectation right now is that it will steady out and volatility will go down. So
That seems to be what people are betting on.
Windmill Willie says that Captain Condor is a fund.
Like actually named Captain Condor.
That's what they're calling it, apparently. Well, That was some good shit, Jay Fresh. You brought in a whole bunch of. I love the inclusion of the options macro there. That was great.
David Chow. 30 million, that's like nothing.
Yeah, why do we give a shit about this guy? In the options macro page, you can see that there's trillions of dollars of fucking delta exposure.
The margin
call value
value for those condors is
400 billion.
way the fuck more than 30 million.
He's probably levered as fuck.
Jesus. I mean, he didn't actually get blown up today. He closed it out on the intraday drop.
I would imagine so.
The one drop we had today.
Yep. Yeah. Our second drop towards 50. They closed the.
Yeah, I got stopped on my puts. I was pissed. I got such a good entry on those puts, and I had to get stopped out.
Are you talking about your
Yeah,
Jeffy
no,
puts?
they're in it for tomorrow
No.
too.
No, I'm talking about my SPY puts, my SPY 500 puts for May that I was holding for an increase in vol, and then I had to set stops.
Yeah, windmills. This is good info. I am gonna look it up after this. I'm interested.
Yeah, I'm just gonna arb this guy into the dirt.
Thanks,
Well,
Jeff. I appreciate it.
Yeah, I hope we answered your questions good.
Yeah, very well.
Cool. And the only reason why I brought up the implied move thing, by the way, too, is because when I did a stream in Gherk's absence, someone asked about it, and I had explained how we're basically taking IV and extrapolating it to a distribution. So there was a whole explanation that didn't get VODed because I don't record my streams.
Was this when you were playing that one FPS shooter?
No, I was just sitting around, and I had a Microsoft Paint open that said "Ask Away," and then I just sat there, and I did a bunch of programming while people sat there and sometimes asked me questions.
Nice.
The music was good though. That's why I don't monetize the stream, because I love copyrighted content.
I'll sit down and let someone else ask a question. Thanks, guys.
Yeah, it was like,
Well,
for sure. Looks
Eric,
like
do you want to
STD's next
answer Windmill's question really quick?
What
He was
was it?
busy end of day. Did they move it or hang in there and get rescued?
They closed it, but I do think they reopened a new one for tomorrow. They closed it on this drop, like right here, when we dropped to like 61. They snapped that shit close, and that's what drove the bounce.
Well, you say they're martingaling, right? Do you know what a martingale process is?
Literally nobody in finance knows what it is. They all use the word though.
So basically, you're saying he's just trading a flat market. Like that's it. So just so everyone who's confused about what he says, martingaling the market, what he means is that the expected next price for the day is the same price for today. So just to make that clear, that it's not some sort of super complex thing. It just means it's expected to be flat.
Well, the next observation is expected to be equal to the most recent observation.
So flat. Thanks, Gherk. Yeah.
So kind of like assuming that the volatility curve is flat.
I mean, it's you're expecting that no matter where vol is, price is going to end up where it was.
I mean, what they're doing is basically betting that realized vol will come down and kind of helping it along.
Well, and also that price will not go up or down. Over like in aggregate, there's going to be some day up ahead where it is the same price. And if these are short term, then yeah, they're just expecting it's going to cross this point again, and that's when I roll the position. And that's what you see on the drop, right? You see the bounce. I mean, that would make sense, right? It crossed probably where he opened it, and he was like, I'm fucking out of here.
Did Mitu just leave without saying goodbye? He just fucking Irish goodbye us.
No, he said thanks.
He said he
guys.
backed out. Okay, cool. Can we get STD up here? STD said his
We
hand
didn't.
up, and I feel
Yeah,
bad.
we didn't even give. We like
So, a little
kidnapped him
information.
and-
STD Slot Machine's wife is forcing him to have a baby.
Oh, god damn it.
Congratulations.
Oh,
Woo!
like
Congratulations.
out of
Yay!
like you're carrying the baby, or you like a seahorse?
He's a surrogate father.
No, I would not survive. I can't do pain. God bless her.
Well, then why are you here?
No, well, all right, Thor. All right, well. So my
I'm
first
sorry,
question,
you set
Thor,
it up.
fuck you, is dude, what's not a question? No, my first question is, Dork, what do you not care about your cholesterol between the pork chops and the orange chicken?
I mean, so I'll tell you what I ate today before I made this orange chicken. I had an apple. No, I didn't. I had a banana, a salad, and a slice of sourdough bread.
Oh, okay, that's not bad.
Yeah, I'm not exactly just scarfing down carbs right now. My girlfriend wanted orange chicken, and I had a whole bunch of leftover chicken thighs, and so I was like, oh, I'll just make some more. I underestimated how much orange chicken 4 chicken thighs was going to make.
Okay, that
It's a
then.
lot
I'm
of
just
orange
gonna add you
chicken.
to it then. All right, no, so my real question was just more like so when you guys are looking at like the live data and you're seeing like these positional like changes coming in and like you're calling them out, I just gotta ask, like, is it really just coming from you staring at those charts and seeing them that closely? Because I feel like when I stare at all the live data, like I'll see it a bit delayed, but I'll sometimes like hear your call out. Like what I do most of the time is I listen to the stream in like a 15-minute delay so that I can't cheat, and I'll try and see it myself.
That's cute.
Ivy.
Have you ever seen the movie The Matrix?
I've never seen somebody intentionally handicap themselves before.
This dude looks at the fucking data
like
8
the thing
hours
is, like,
a day.
I don't want to be like a handicap trader because, like, as great as it is to have like the stream and everything now, like, being honest, one day it's not going to be here. So I don't want to be.
Yeah, I will die.
Trader. Well, don't say it like that.
Yeah, and I'm gonna get his collection of designer socks.
But I'm gonna leave everything to JFresh because his callouts are almost as reliable as mine.
And Gammastrike hats.
Yeah,
I'm gonna keep the Gammastrike.
JFresh is gonna get the stream and the Gammastrike hats.
I'm gonna keep the Gammastrike hats, all of them, and I'm gonna burn all of your other belongings.
Perfect.
Dude, can I just have one Gammastrike hat?
As long as I'm buried in a Gammastrike hat.
I'm gonna walk around. Sure, you can have one of them.
I'm digging you up and taking that hat.
You know that book, like that kid's book, the hat salesman, he's like walking around with like 30 hats on his head.
Oh my god, yes.
That's gonna be me.
Oh fuck, what was the name of that?
Someone in here has to know.
Oh, it's like Mr.
I'm gonna type in children's book.
Oh my god.
With a bunch of hats.
For sale.
Caps for sale.
Caps for sale. There it is.
Okay, so STD, I like your question, right? The call-outs are really good. Gherk spends 8 hours a day looking at this shit, so he has a very good intuitive sense of what's going on. Yeah, and years just looking at this shit. So the biggest thing...
I also know how it all works.
Yeah, right. I mean, yeah, we're very deeply in tune with the stuff, but like the biggest thing on, all of these is IV. Okay, IV tells you relative pricing. And so if you look at the IV curve, it can help you suss out where long and short options interest are. Because you'll see relative pricing shifting on those contracts. Let's say there's a lot of interest, like somewhere like 30 basis points out of the money and in that like neighborhood, right? What you'll see is a bump in the IV around there because the market makers see this interest and they want to make sure they collect a premium from it. So they will move up their ask and, collect the premium from all these buyers that are up at these prices.
Yeah.
So that's
sometimes
the kind of
it's
stuff that
just
Gert sees.
so sometimes it's just really having that keen eye of just staring at it.
Yeah, the Gex stuff on the left of it too. I mean, like you
Yeah.
see IV like that, and you see those bars moving around. We're
I
still in the
am,
works
so
and
yeah,
talking about some new stuff to help with that too.
we've been talking a lot about how we can augment some of the tools on the live data page to make it a little bit easier to see some of the things that we're seeing. Obviously, it will take a lot of training, and we'll probably have to make some videos. We'll definitely keep doing these. But just some ways to help with that visualization, because right now it can be a little bit difficult looking at that IV at the aspect ratio it's at, and so just some ways to make it a little bit easier to see. Oh, hey, like over the last some time frame, IV has moved in this way, which indicates one of two things, and then if I look at this other data set, it shows it's likely this thing that's either bullish or bearish, so that's showing it. So then you can say, oh, in this area, it's likely puts were sold or calls were bought.
I actually
In this,
I actually kind of love the new iteration of these two charts. I don't like the scale of them or anything, but like I think like the way we have like the gamma set up now, it's really easy to see like the positional moves as they come in, and you see this like the spikes in gamma relative to moneyness, like the actual gamma like curve, like the distribution of gamma, not the just gamma exposure. And then like you can cross compare that with the implied volatility, and you can get a really good idea of a fairly good idea of bought sold at each strike as next to spot.
Yeah, I think that's probably like my biggest problem is just because like obviously like I'm working during the day, so I'm not able to like I'll look at it for like a few minutes and then I'll look away, and then when I come back,
no,
like
yeah, you've
I'll
got
be
to
like,
be
oh, I just missed all this.
Oh,
you've got to be like, it's really challenging now. You've got to be like Gherk, basically like staring directly at it all day like a psychopath.
Man, I
feel like I'm really getting fucking thrown under the bus a bunch tonight. First I'm dying, and then JFresh is stealing my hats.
Our
Selling
hats,
one to me.
our hats.
Yeah, seriously, where's my fucking hat, Gherk?
How about this? You send it to a neutral party like me, and then I'll distribute them out.
No,
we
that's what I'm
already
going to do anyway.
decided.
I'm going to send the entire box to Dork, who's going to then take a
No,
hat out of it
We're
and
never gonna get shipped.
send the entire box to JFresh.
You're going to send the entire box to me for me to distribute to everybody and do all that mental work, and then I'm just not going to do it.
Yeah, that's
Wait.
That's
Gert
what I'm
ships it to
already
me.
doing.
Gert ships it to me. I take a hat, and then I ship it to JFresh. He takes a hat, and then we just keep doing that till all the hats are gone.
It's perfect.
No, I'm just going to not do it because I have my hat. What? I don't care.
No, you don't. Oh, yeah, you would have your hat, though.
Yep.
You selfish son of a bitch.
Yeah, I'm going to have to be last on the list.
I have 4 hats, technically.
These hats are going to make it all over the globe, and they're going to get back to JFresh with still like 10 hats, and he's going to be pissed that he still has to fucking find a place to put 10 hats.
Well, that was the only question I had. Thank you guys so much. I'll hop off here so someone else can hop on.
All right.
Yeah, for sure, man. Yeah, like
no one
I
else
said,
has
just
their hand up, but
just pay more attention to IV. I think that will help you glean some of that information. If you see a bulge or a dip, like you definitely should be keeping an eye on that range in the Gex chart.
yeah,
Yeah.
always
Tell me
keep
more
your eyes
This
peeled
week
about
when
for
we
this
had the
bulges.
bulge.
drop, that was exactly how I saw it. Actually, was I saw all the activity at what was it, 52.65 if I remember right, and that was what was giving me the sign that we were going to drop.
Yeah, I honestly like I had set my stops when I saw the IV at I think it was 450 moving up, like in that range. I was like, I need to set a stop. This thing could just go and test that. And at that point, I would start losing money, and I
Yeah.
fucking nailed it. Yay!
Yeah.
I just bought a put when the Trump was done talking.
Honestly,
I didn't
solid.
even look at the data. Shit went like $40 in the money.
Yeah. All right. Well, thank you again, guys. Appreciate it as always.
No problem,
Take care.
man.
Yeah, for sure. Thanks for coming up.
No problem.
Someone
Oh.
raise your hand. Grackle.
I
I
forgot
saw
to tell him
you.
good
I
luck
saw
with
you
this
sneak
kid.
your hand up and then put it away. It's Carl.
No, don't let him. Oh, God damn it.
Hello.
Carl, have you ever
financials.
tried timing Dork out of the chat?
No, he has, and he kicked me out.
All right. We'll see Dork in a minute. Yeah. Hello.
Jesus Christ. That was perfect.
Wow, it actually worked. Poor Dork.
Yeah. No, I think it did.
He's crying into his orange chicken.
I don't think I have any crazy questions. I can try and ask some questions I think people may have. So I guess. Okay, so this would be directed towards JFresh, I suppose. JFresh. A lot of kind of your tweets and along with like some of the stuff you like to shit post and like not shit post and more serious, like informative stuff that you post in the Discord. I know surface level, some of it can be seen in the options macro page. In Gammastrike, if I jump to the options macro page, how can I kind of see like the last 3-4 days we've been on a tear, right? Relatively per se, right? Like, but it's kind of like, okay, like where what am I seeing here that's kind of showing me, okay, more VUPs, or like, okay, this is it, like no more, right? Per se.
Yeah, so I mean, one thing to be, and Gherk's playing with it. I'm trying to get this thing to load. Oh, I'm in the wrong one. We have like a million environments. I can't keep track of them all. So a couple things to keep in mind. We could just kind of I'll just walk you through each chart and kind of what information I glean from each chart, and then maybe talk a little bit about how I synthesize sort of a understanding of maybe where the market is based on that information. So the first thing I want to look at is the top left. We'll read it like we read a book. This is the value of all the contracts on the market. Okay. So salmon is puts, blue is calls, and purple is everything.
That is hot pink,
So-
not salmon.
Well, salmon's puts.
Orange?
The hot pink is everything. Yeah, orange-ish salmon.
Peach.
You're
Obviously
colorblind.
peach.
Oh my god, JFresh is colorblind.
What?
Well, he's got glaucoma.
Oh, that's right.
Is it really not peach?
It's
peach.
Salmon?
It's orange as fuck.
No, it's like a peach.
I'm gonna zoom all the way in on it. And you're gonna
Are we
see it.
gaslighting? Is this gaslight JFresh hour?
It's clearly green.
Because I'm down.
There. Look. Jesus Christ.
What,
have I
what, is
done?
hap- what did you just do?
I just zoomed at 500%.
I hope that you could never fix it. That's too bad.
Yeah, I don't, because that'll be our
Afflicted
site
with
sucks.
that for the rest of your life. Okay. Anyway, you all hopefully know what I was talking about with those colors. So the first thing that I'll notice is, oh, hey, like before we had that huge event, like that huge drop of our embargo on China, contract values were kind of steadily, it's been kind of an interesting time. So in like 2023, they started rising, and then they flattened out in 24, and then we had like peak AI hysteria, like end of year 2024, and then all that stuff, all that bullish positioning expired and dropped off back down to like kind of the level that we were at before all of that hysteria. And then if you continue on, it starts to slowly decline, very slowly. And then we peaked and we got all of that put value showing up. So people were buying puts were going in the money and becoming more valuable. And then over time now, people have bled that off back down to roughly, the longer term steady state value. Something similar you're getting from the delta values here over on the right-hand side, yes, there's a lot of volatility, especially between puts and calls, but the overall amount of open positioning has roughly been consistent. The primary thing that has been changing, which is really hard to see on this chart, on these charts from the overall value, is the leverage on puts. So if you look over on the far right, the top, you can see over time puts were consistently levered up around 12 on the top right. And that was just because people were selling them really far out of the money, picking up pennies in front of a train. But then at the end of the year, once all that kind of positioning fell off, and Trump got into office, I think everybody was kind of like already starting to pull back on some of that risk taking of sold puts. So that trend has been happening all year of this like deleveraging or de-Vega risking, short Vega risking. And then, that tariff event kind of just set the tender on fire that was already kind of growing there. But then you notice if you zoom in, kind of like right where we are now, it's definitely, it dropped to a minimum, on 4.3-ish.
Right.
And now it is trying to recover. And it is doing it's doing an okay job, but they're trying to recover it. So this tells me just these charts here tell me a couple things. One, the regime is changing. So short puts, just all in short puts has been slowly receding throughout the whole year. So that tells me one thing is that hard Vs probably are going to start going away, which indeed they have, right? We're getting more bi-directional volatility instead of just any downs, which becomes even more ups than before. And that's largely a function of the fact that leverage has been declining and people are no longer selling puts into every single dip as hard as they usually were. But the other thing that I glean from this is that nobody's pulling away from this market. Nobody's retreating from this market or from the risk in this market overall. The risk is just bouncing back between puts and calls. And so, you see this big spike, but you don't really see like a massive deleveraging event in the sense of like you would expect OI delta value to drop hard or OI contract value to drop hard, right, for the purple line. Because that's not happening, it's showing that people are staying in the market, they're staying in risk, and they're going to try to ride this out and try to play through, right? And so I can glean all of that information just from looking at these curves. I can then, go into a deeper dive of positioning in terms of moneyness from the bottom three curves. And we did that a little bit earlier. I don't know if you were here, Carl, so I'm not going to do that again. But if you look at the bottom right leverage, we talked a little bit about what this curve means in terms of positioning. So right now, less further upside from call positioning, and the sold puts that are forming are sort of comfortable sitting around 3% below us. And you can get some information as well from the other two charts and just seeing how does the overall contract value and overall delta value change as we move around on this curve. So actually you can see we're actually pretty close to the bottom in value, right? So everybody's kind of positioned fairly comfortably around the current prices in the market. That's what I pull from all that. I mean, if you want to go down to the bottom three charts at the very bottom of the page, so they could show you where the delta is positioned in time. And it just kind of shows you that, we still have a lot of time left in the year, but definitely people are still kind of positioning 30 to 90 days out. They haven't necessarily gone too far in on their leaps. So quarterly OPEX kind of deal is where we're at. People are just going from OPEX to OPEX, which is fairly standard. That kind of has implications, though, if you think about like the tariffs and how that's going to play out. A lot of people think that, basically what we did with China is we shut down. We have an embargo, right? It's like lockdown. It's like COVID lockdowns all over again. So even if we just today said, oh, never mind, we're just going to turn it all back on, there is an impulse that we're going to feel the effect of for months. And so then I think about, okay, there's a lot of people who are trying to position to capitalize on the spike and vol and get it back under control. And a lot of that positioning is in the next 90 days, right when all of this turmoil is going to persist and sort of ripple. It's seen, and people have long-term deleverage from the sold put trade. It seems like to me we're just set up for a higher vol environment, at least through the summer. I don't know how low they're going to be able to get vol before it spikes again, but I think sub 20 is going to be quite a feat for a while.
Yeah.
So
Also, VX cash VIX correlation is still really high, which means that the short vol that they are the amount of short vol that they're selling is not sufficient to push the spreads apart. So it's very low relative to what we saw last year, where correlation was negative over like a 45-day rolling period. And like part of getting VIX back into a place where it's more manageable is getting it out of backwardation, where that incentive to go long the short end of it is gone.
yeah, I think there's a lot of out of equilibrium forces that are fighting against people right now. Then if you look at like notable chains, and now that we've developed to be honest, now that we've developed a lot of scanners and we're kind of building out our scanning infrastructure, it might make more sense for us to just kind of absorb some of that into those existing scanner tools. Now that those are developed, that's something that we will talk about over time, and add other things here instead. Particularly, we're interested in looking at sector-based information and some macro scale volatility information as well to put on this page, and so we could free up this space here. But at least you can kind of get a sense, just a rough sense of like, where's all the interest, where's all the options interest, where is it concentrated, right? And so you can see one is delta as a function of market cap. So that's just kind of saying like which options chains are like 100%, or in some cases more than 100% of the entire fund. So XRT is always like this, right? I mean, it's always sold short well over 100%. And the reason for that is because there are puts on it well in excess of 100%. And so the shorts are just market making hedging, right? Which are subject to much looser reg show rules and stuff. And so it just consistently stays on reg show, and it's like super shorted. It's just people do that. I'm not really entirely sure about what the entire trade is there, but people like to short XRT. IWM is high. CRE's been high for a while. It's kind of been an interesting one that's been sitting up there for quite a while. We haven't heard a whole lot from banks, but yeah, and then you can go through some of the other ones.
But still super bullish.
Yeah, and then you can look at just total delta. SPY and QQQ always kind of near the top, right? They're just huge. It's SPX, SPXW, SPY, QQQ. Those are usually the top four.
NVIDIA slid up above IWM.
Yeah, and back when NVIDIA was trading, near 140, 150, it was actually higher than QQQ as well.
It was up there,
I mean,
yeah.
it was huge. So you can kind of see that like NVIDIA still very interested, a lot of calls on it. but maybe not quite as high as it used to be if you've been tracking it. A lot of the players you'd expect, Tesla's up there, IWM, Meta, Apple, Amazon, Microsoft. Matt, the MicroStrategy is interesting. I don't know that I've recalled seeing it that high in this list. So obviously something is going on. I think I've heard rumblings. I haven't seen anything super like concrete about what's going on, but people are saying like SoftBank is buying it, buying Bitcoin. There's been news about a bunch of other businesses that are trying to create their own sovereign wealth fund, whatever. I don't know what they're all doing. They're a bunch of scams are trying to scam Bitcoin. It's a race to see who's the dumbest person. I don't know. Anyway, there's interest there. It's picked up. Netflix, obviously, it's like the darling right now. It's just goes up, up, up. The other ones are, usually they're kind of.
You get your Mag 7 du jour.
TLT is actually kind of low, I think, relative to what it has been. So I think people are just kind of getting out of the TLT. It's kind of interesting. But anyway, so you pull all this information in together and you get a sense of, where's the market positioning? What kind of things are they expecting? What kind of things are they hoping for? Where might things go awry? Where are the weak points that could potentially start showing up? And then sort of a little bit of a dive of like on a ticker level, where is this interest showing up? So I hope that was helpful. There's kind of a lot of information here.
No, that was great. I activated you. That's what I was looking for.
Yeah, I mean, and with a lot of this information, so a lot of the things on our website, I think, are deceptively simple. Maybe I'm just too close to it and I think it's simple. Maybe you're all looking at all these charts and thinking what mean and you have no idea. But I hope that at least some of these things make sense and might even seem deceptively simple and don't really have a lot of information in them. But most of the information that we've put on this website, we've intentionally taken a lot of information and compressed it into the simplest form that we can present it and preserve a lot of that information still in that data. And so it's simple but dense. And so I would encourage everybody, like if you see a data set and you feel like this isn't really a very valuable data set that says a whole lot, I would encourage you to challenge yourself and say, maybe I don't understand this as deeply as I think I do, and I should ask a question about it.
JFresh is calling you stupid.
No, I'm
He's implying it.
Implying
it's
it.
The implication.
He wants you to open up the seashell of knowledge.
Yeah, I'm making a bid for stoking your curiosity and reviving the.
I mean, if you guys think about how I do pickles picks, right? I do it pretty much entirely with Gammastrike data, with the exception of like macro analysis and stuff. And it's very methodical. I jump from one data point to another. And then as I extrapolate information from each of those data points, I build out, a thesis for the trading day and the trading ranges and positioning and, where volatility interest and volatility arbitrage are going to be. And that's all here in these charts. And, they seem simple, but there's a ton of interpretive analysis that you're able to do with them because they are very, like JFresh said, very dense.
Yeah, and that's why we're trying to write docs and trying to do these weekly town halls to kind of help people peel back the layers.
I have more questions about this page. Okay, Gherk, you're already up there. So,
how could you I just explained the entire page. I have nothing else to say. So if you have a question, I can answer it.
You just called me stupid.
No,
Just because your small mind can't comprehend
No,
this wealth of knowledge.
in general, ignoring the kind of like data J chop in the last couple months, looking at the top charts, the first and the third one, so top left and top right, it would be indicative that the entire market, because for the most part, all of 2024 was just sold puts, right? Which would lend credence to the overall put contract value being lower, because as you're selling them, they're expiring. Like you want them to go to zero. And that's also why it'd be leveraged to the tits, correct?
Yeah.
Cool.
Yeah. So usually, yeah. So maybe that's another point. Okay, you did pick out a detail that maybe I took for granted here.
Bill.
Yeah. So in terms of leverage with contracts, if you think about it, if you go and you want to buy NVIDIA calls, right, and you want to buy them at $5, right? How much are you going to pay for those, right? If it's trading at $100 today, you're going to pay about, 95, right? Because you're paying for the right to call them away at 5. It's worth 100. So that right to call them away at 5 is worth 95. You're basically getting no leverage. Depending on how far out you buy them, you can get a little bit of leverage, and that's why a lot of people, like Nancy Pelosi, for example, is a noted person who does this. That's why a lot of people, instead of just buying shares outright, they'll buy like leaps, deep in the money leap calls, because you can get a little bit. If you are bullish on something, you can get a little bit of that premium if the IV is high enough. But that being said, things that are deep in the money tend to be very low leverage. Things that are very far out of the money are very high leverage. So high leverage means a lot of out of the money. Low leverage means a lot of in the money. Right? So again, if you come back to that example of the blue curve for calls on the leverage chart at the bottom, leverage is a function of moneyness. Right? Leverage starts to go down as moneyness goes up, which means that contracts are going in the money, which means leverage is going down, right? And so what you would want to see if you were hoping to do like this massive move up from here is you'd want to see a huge peak, out at like 1.05 or 1.07 moneyness. You'd want to see this huge peak, up above six or so leverage. That will tell you that there's a ton of interest way up there.
I think it's really interesting that we got that big peak down at like 30% out of the money. Like someone's buying a lot of in the money calls.
Yeah, I mean, again, that could be like like the Nancy Pelosi effect I talked about, where people want to go super long the index. They want, they don't think the market's going to crash and go down 30%, and so they want to go long, but they also want to capture some of that premium as well, because you can get some leverage if you're out there, right?
Yeah.
Yeah, I'll just leave it there.
Nice. Thank you.
What are you taking notes on, George?
Your butt.
Nice.
Also, Carl, you're a goddamn fuck for timing me out.
Oh, I forgot you were timed out. How long are you timed out for?
An entire minute.
We timed it out for a minute
God.
and then booted him out of the channel.
You fucker. How could you do this to me? I have a
'Cause
reputation to uphold.
so do I.
It's valid. Carl was here first.
I
Was
know,
I?
but I'll be here last.
That's because you're younger than us. But not with what you're doing to your cholesterol.
Mm.
That's true.
You gotta stop eating fried cheap meat.
I'm just gonna. You know what? Just because you said that, I'm gonna eat more orange chicken out of spite.
Just make
I'm
sure you
already
have it with
full, I
white
don't care.
rice.
Yeah, I'm gonna have it with white rice and drenching that shit in soy sauce too.
I got spicy lentil trying to hop up here. Well, thanks for coming up, Carl. Those are some good questions.
Yeah.
Forced
You guys take care.
JFresh to do an entire walkthrough of the options macro page.
Yeah,
Again.
it needs to be done every once in a while, you know.
I was looking out for our bottom line.
Hey
My
guys.
baby. Yeah, hey.
So
Oh, you guys can go ahead if there's something you wanted to say.
No, it's just you.
I was just
we're just
talking
bullshitting.
about. I was just
Yeah.
talking about babies. Go ahead.
Is it time for baby farms?
No.
Okay.
So I haven't. I missed a bunch of the earlier roundtable sessions. Like kept up with it. So some of the ones that are like the one that you're currently on, is that part of the live subscription or is that like part of the regular subscription?
Live.
That's regular. What?
Okay.
Macro's not on the
Oh, yeah, sorry.
base subscription.
Okay. So like
yeah,
the
actually,
ones
the
that
options macro was designed for the middle tier that we haven't really released yet, but it's supposed to be in the middle and upper tier. We just haven't
Okay,
built
so
the rest of the stuff middle tier yet.
Yeah. We're building as fast as we can.
Okay. So it's not like I have to like log back out and in to like whatever I see when I refresh the page, that'll be the tools that are available to me.
Yeah.
Yeah. Okay.
Or are you getting like the live data thing popping up from the beta?
No. I'm not because I have that first level, the base level.
Oh, okay. Do you have options macro?
I do not. So the options macro is the circle one, right?
It looks like a little globe like this.
Yeah. I do not have that.
Oh, okay, yeah, that's correct.
Okay. And my other thing is like, so I went through the documentation and there's I was trying to figure this thing, but this is kind of like a basic question which you may have answered in
That's
like,
fine.
one of
Go
the
for
earlier
it.
ones.
You can answer it again.
I guess for me it's when I guess when delta. Okay, you have spot on a stock and there's a gamma ramp to the upside, but there's no delta. It's all like
All
there's
gamma.
no like positive delta.
Mm,
So I'm trying to see what situation does that represent. Like I wasn't able to piece that.
okay, so there's a gamma ramp to the upside, but there's no positive delta.
Or like there is gamma to the upside,
Okay.
like positive gamma to the upside, but there's no corresponding delta reflecting that. So I guess okay, if you right now I'm looking at this stock BLDR.
BLDR.
Yeah.
I think I have an answer, but I want to make sure I understand the question first.
So
Yeah, same.
if right here, so if you do the net, so that you can see like a positive gamma.
Yeah, there's a little bit of positive gamma out of the money.
What was that?
I see it. Yeah, there's like a little bit of positive gamma to the
Yeah,
upside. Yeah.
So but if you look at delta net, it's all like negative.
Yeah.
So through those particular strikes. So where gamma is positive. So what is like how does that situation happen?
I mean, this
what
looks
I
like a
was
lot of like sold calls. Sold puts, sold
There's
calls.
there's also just a bunch of puts. So, okay, so a couple of different things are happening here. So the first thing you need to kind of burn into your brain is for gamma, anything that you, who is a participant buying from a market maker, anything that you buy has negative gamma. And anything that you sell has positive gamma. Okay?
Okay.
And so so all of these charts are using what's called the naive assumption, which assumes that all calls are sold and all puts are bought.
Yeah.
And the reason that everybody, okay, I'll just say this for everybody else, even if you're on the same page. The reason that people do this is because the conventional wisdom for options is insurance. So if you're long everything, you buy downside protection in the form of puts, and you sell calls to try to scavenge some income or return from your long holdings.
Yeah.
Okay, so if you think about that from a gamma perspective, if all of the if all of the calls are sold, then this is from the market maker's perspective. So it has a positive gamma. So the calls are all positive gamma. The puts are all negative gamma. Okay. And so if you display the net, yeah, you're gonna have some positive gamma up here. But then if you go to the delta, the biggest difference between the delta and the gamma is that all of those calls that are above spot are out of the money. So they're going to have decaying delta as you go away from spot. But all of the puts are in the money. And so their delta is very high. And so even though you have a situation where their change in their delta is going to be roughly the same as you go upwards, that's actually an effect, and I bet if I open the OI, there's going to be a bunch more puts than there are calls. Oh, it's kind of even, actually. Okay. So those puts have a ton of delta, and that delta is going to change, a little bit as you go up because they will decrease in value.
Yeah, the puts are a lot of the puts are the in the money puts are further dated than the in the money calls. So that's
so
thing
suffice it to say, yeah. So I think your biggest hang up is, yes, both the value of the calls and the puts are going to change as you go up, as price goes up. But the biggest difference here is that the calls are going to go from out of the money to in the money, and the puts are going to go from in the money to out of the money. And so that's where that big change occurs.
And so if you're looking at like something else fun about this is if you're looking at an index, right, and you have a huge amount of negative gamma to the upside, as you move up into that delta, huge amount of negative delta to the upside, you move into that delta, it accelerates price action to the upside because the market maker buys as those puts fall out of the money.
Okay.
And that creates like the squeezing effect. And if this were all very positive delta, it would be resistive.
Oh, I see. So okay, because I always thought it was positive delta is with positive gamma, the market maker is supportive of the price.
Yeah, it's supportive, but it's also like the positive delta will also act as a resistance. So if the positive delta goes in the money, like the call goes in the money, it becomes more supportive. But it like the next call to the upside that is positive is resistive.
Okay, Gert, can I point something out really quick too?
Yes.
That would be helpful conceptually. So you know what the gamma curve looks like, right? It looks like a bell curve. Okay.
Boop.
So every options contract has that little bell curve, right? In terms of its gamma, its potential gamma. Okay. When you're crossing a strike, right, that particular strike is at its maximum gamma. Okay, so the rate of change of delta is at its most sensitive.
Yeah.
Once you cross that strike, that rate of change of the delta exposure on that contract starts falling off. And so that's why these large concentrations of, delta and gamma will as you're breaching through them, they'll tend to start getting rejected because that momentum provided by the shift in the market maker hedge diminishes quite quickly. So just to add another layer, if you're a graphical type, you could just imagine, approaching the peak of the bell curve and then crossing the peak of the bell curve. It sort of looks like a oh, Gherkin, no, I mean like just straight up gamma, not gamma exposure, just like gamma contract. Yeah, it just looks like a bell curve.
Yeah.
Like
So like at the
here.
money,
Yeah,
gamma
it
is
looks
the
like
most sensitive.
this.
Yeah, like that. Yeah. So yeah, that's the whole idea is as you cross that peak, right? Yeah, the rate of change of delta is going to start falling off. It's not like going negative or anything crazy. It's just that it's no longer, as strong of a contribution per dollar of advancement in the price as it was.
Because once the
a dollar
contract's
ago.
in the money, it starts to lose extrinsic value
Yeah, exactly.
and gain intrinsic. And the deeper in the money it goes, the less intrinsic value is left to be gained.
Yeah, so I guess people try to reposition for more out of money calls to get more leverage out of it. Or if they're still maintaining like a bullish perspective on it. Right, you sell your call because now it's past the strike, and you try to reposition for like a higher strike.
Mm-hmm.
I mean, it's trying to manipulate the market maker hedge like that can go very poorly because you also have the spread to compete with. Like to try to do something like that, it takes a lot of leverage. But most of the time, what you would rather do, right, is maybe sell some of it and then reposition into something that's not, as sensitive at that price, right? You try to spread out that bell curve. If you're just long that contract, what you'd want to do is, sort of establish a range of profitability. So, it's not like, you're never really going to see like a direct, oh, they're just stair-stepping price with these things because that's, extremely risky. And most of what you see is, a component of some, larger position. So with we're lacking a lot of important context in any given concentration of delta or gamma. And if you can sort of suss out that context, you can come up with a much better picture. But yeah, I mean, and that's usually when you see those moves that go further, right? That may be someone who is doing the same thing on a different contract that's like deep in the money. Right, that's probably where you're actually seeing the action, where you are seeing repositioning. Is something that's either deep in the money or far out of the money. So that's that's at least what I think about it, because in those positions, right, if they do change their position, the gamma is lower, and so what you're going to come up with is a much more one-to-one, flow between the change in your position and the market maker hedge.
So I'm going to try to draw this to help. There's another question in the YouTube chat, which I'll read off here in a second, that kind of follows up on this. Say these are 3 strikes of gamma. And you have the relative exposure levels on each of these strikes. So hold on, let me switch the colors. So you have like this one, and the gamma on this strike is like, or gex on this strike. This is gex. And then on the next strike, maybe it's a little lower. And then on this strike, it's really high. As price moves, the sensitivity of gamma on each of these contracts picks up and falls off. And then the amount of gamma exposure can help you kind of determine how much dynamic hedging is going to occur due to that increase in sensitivity at the strike. So these are like this. I'm trying to show you like the 3 different, gamma gamma curves for 3 separate strikes, all with varying degrees of exposure. And this is kind of what you're seeing in the gamma chart, except you're seeing, all of the strikes gamma as one curve, versus each of them having their own individual little curves. And so basically, as the yellow strike approaches at the money, its gamma will be at its highest level. But the next strike doesn't have a lot of gamma exposure, and so as you approach the peak of the sensitivity on that blue strike, it's very likely that the market maker's sensitivity to gamma is skewed to the downside where the larger exposure is. But if you get over the blue strike, you're likely to pull towards the sensitivity on the upside strike, which is the largest of the 3. And so that's kind of how that, think of it like a 3-body problem.
Okay.
A little bit like you have, you have three different planets or stars in a system, and they're each pulling price, one way or the other based on their individual gravities.
Yeah, I think it's a good way to put I try to keep things in things that I understand when I think of especially with Greeks by strike and what it means to see large concentrations of gamma and all that stuff. And I try to think of it in terms of if I had a bell curve, right, that defined sort of the range of where my likelihood of being in the money is 50-50. That makes a lot of sense to me. So in those sorts of terms, when you see large concentrations of gamma at spot, which you should, especially when you cross those large concentrations, but at spot, you should see them more often because that is where the swoop of delta is sort of located. But as you go further out and you see larger concentrations of gamma, right, that gamma exposure is really that's a thing. That is the change in delta. If the stock moves up $1, the change in the delta is going to go up by this much. So it's a real thing. When you see those out of the money concentrations, that's a really high concentration of leverage. And so as you approach those strikes, what you're probably seeing is that position deleveraging because they don't want to have their gamma exposure explode. That's why you don't see these things spike up really hard as we approach them. You see them move up a bit, but nothing insane. So I don't know if that just takes you further down the rabbit hole or not.
I guess so that is when I look at it as likelihood of maybe moving up, or how this change, the call to put ratio and gamma delta as price moves up. What you've said, what you guys have explained is making it clearer. I guess I don't know, is it just the opposite for when price can move down? If you have from spot, the likelihood of it going down increases as is it just simple as negative? There's a lot of gamma exposure to the downside, but even if there's a lot of exposure to the downside, say there's a lot of delta, positive delta to the downside as well. In that instance, is it more the delta will actually prevent, even though despite the huge negative gamma exposure, having the positive delta will prevent it from sliding down further? Can I?
Yeah, no, that makes sense. Yeah. So what you're seeing is once again positions changing as you approach those, those positions. But to like prices when there's less, hedging activity going on a strike. That's when you get those more sort of unidirectional moves. Like you kind of traverse them instead of kind of sticking around and consolidating there. But you're right. That's why, like, when you approach those positive delta pockets as you move down, right? Why you usually meet some resistance is, once again, the position is building up like leverage that, someone who has that many contracts open, they're not trying to explode their leverage like we are, right? Because we're fucking degenerates and we buy calls. Like, they're trying to maintain a specific gamma exposure, a specific delta exposure with this position. And so to do that, they have to sell shit and buy shit constantly. And that's what you're seeing when you approach those strikes and you meet that resistance, is those positions are starting to deleverage. And so you get this big contrarian move.
I see. Okay.
Yeah, so that's kind of gamma in a nutshell, right? It's the same value for a put and a call, but you have to, when you have to think of things in very simple terms when you're talking about like those base level principles, and then
you also,
as you move up through the other stuff, it makes a little more sense.
Something I try to spend a lot of time thinking about, and I suggest everyone does with this information and this software platform that we've built. Think about how structurally positioning affects dynamic hedging as much as you can. It's going to go a long way to helping you use positioning to determine directionality in price. So, I mean, when you think about like you guys are talking about, like those big pockets of positive delta, in reality, as you move through the little pockets where there's not very much delta, and you generally move through those, or gamma, and you move through those pretty quickly, because one strike is realized, then the other, then the other, and the other, and it creates momentum in the dynamic hedge as exposure rapidly shifts. When you hit a big block of delta like that, the dynamic hedging kind of stalls out. There's not much more to hedge, and it almost acts as like a neutralizer for the market maker. And so that's one of the reasons you kind of chop around there until like a direction is picked, and then you can get a continuation. And if you have a lot of momentum, like a ton of it, sometimes you can just burst through those and gain even more momentum. And on very rare occasions, you'll see that happen. But we saw a little bit of it. We've seen a lot more of it recently with the high volatility in the market. And that's, also to do with, Vega exposure that's picking up, and there being so much impact on Delta from IV. But, that dynamic hedge that's constantly going on in the background, and thinking about how that's working with the price action tells you a lot about, where support and resistance is going to be found, where you're going to get continuation. All the things that I call out every day, and people are like, oh, it's centaur magic. It's not, it's just, I just really understand how dynamic hedging on the market maker side works. And so if I know positioning, I can then, paint a picture of how I think price action is going to go. And so the more you think about that, the more you understand it, and the more you become kind of in tune with that, the more useful all of this data is going to become. And a lot of it's going to be, just looking at it a lot and intuitively understanding it. But understanding the effects of, those first and second order derivatives and all of that is going to be, that's important too.
Got it. Yeah, I guess I just spend more time internalizing it. Like, it's still like, it's kind of slow. Like, when I see it and then like try to put these things together.
I mean, one of the cool things I'll tell you guys is, like, if I stream GS all day, especially for the intraday data, going back and like looking at the stream and being like, what did he see here? And can I find that pointed to, that price or that price action? And then, understanding how one equated to the other. And like, because you can go back in the stream and look at the data I was looking at the time that, I said like X will be resistance or Y will be support or whatever, what have you, and that way you can look at what changed, where did it go, was it right, and what was the data I was looking at before it happened, to kind of walk yourself through those steps over and over.
Okay. But I mean, I guess that would be. I mean, would that be only possible with the live one?
No, I mean that it works. It works with the overnight stuff too.
The Greek
It's the
spy
same.
strike is
It's the
all
same
the same
thing.
principle.
It's just a longer time frame, but the principles are identical.
And it's really helpful too when understanding things like the neutrals as well and their implications, right? We always talk about these things like the damping effects and what have you, but the like understanding the smaller picture, right? What does a call do to the market maker's hedge, right? That's something that you can ask yourself and try to internalize that, right? What when I buy a call, what does the market maker do, right? That for they're now short a call, so they have to replicate a long call, right? What does that mean, right? So that's and it's you're basically just when you look at the Greeks like delta and that kind of stuff, you're seeing the market maker's reaction to you having this one call, and everything builds from there, right? And you do it for a put as well, but you know what I mean. Like you catch my drift. So definitely, I mean, read the docs, right? They have some math, which is kind of gross. Like what is? And I don't mean to call you out, and feel free to not answer, but what is your math level of understanding? Like, are you like, do you know statistics, calculus, what kind of stuff like that?
It's not at that level. I mean, I did some
that's fine.
linear differential equations in college, and that's about it.
Okay, yeah, that's totally fine. Yeah, just go to the docs and read through them and try to internalize a lot of that stuff. So in the options fundamentals, when we talk about the Greeks, you go to delta and there's these calculations. The very tippy top one, it's got those curly D's in it. That just means the change in option contract value, right? As big V, and then the change in S, which is the spot price. So, looking at those as derivatives, right, will help you sort of understand how they relate to each other. You don't need to like get into the nitty gritties of it unless you really want to know, right?
It's just, I guess, even I don't know. I guess maybe I just have to take my time with it because, like, if say you were to ask me, like, okay, delta neutral moved above gamma neutral on the stock today, like, what does that imply? Like, I wouldn't be able to tell you.
The concentration
Well, so look at
delta
that's
on the chain is moved higher than the concentration of gamma. That's really relative to where spot is. So if spot is above or below gamma neutral or delta neutral, that's going to have a big effect on your interpretation of what's happening there. But I mean, generally speaking, and me and Dork actually were talking about this earlier. It means that there is a significant shift between at the money positioning and out of the money positioning. And that's kind of why those neutrals flip, is that things have repositioned in a probably a fairly dramatic way. Although if it's a very illiquid options chain, maybe not that dramatic. On a very liquid chain, if you see something like that, it's definitely a big red flag that something's changed really significantly. But essentially when you're looking at those neutrals, delta's kind of representing the concentration of positioning, and gamma's kind of telling you shorter, longer dated. Because remember, like, the shorter dated things are, the more gamma they have, the closer to expiry.
Yeah.
And so a lot of times if you see like gamma move up really rapidly and say it's below delta neutral, it starts to move up really rapidly towards spot above delta neutral. It's telling you that like at the money, short dated interest is rising very quickly. Maybe even out of the money. I mean, I've definitely seen situations where like gamma neutral goes over spot because people are buying not just at the money but out of the money short dated calls or puts.
Yeah, so there's a section in the docs too, besides just the Greeks, that you should definitely look into for this. In the market mechanics section, I would just read that entire section, but the aggregate portfolio exposure and exposure hedging segments are really good and go into this stuff in detail, and they're worth taking a read.
Okay.
Yeah, definitely check out the docs and read that. I think that section, perhaps in particular over the Greeks, is going to help you sort of get another flavor of what we're talking about here.
Yeah, there's so much information packed into the neutrals too. Just
Yeah,
the
they're wild.
overnight side of things. I mean, like if you look at SPXW here, you have a bunch of things going on. You have gamma max kind of diving below Vega neutral. You have gamma neutral going under delta neutral. And what you're seeing here is, short dated positioning at the money is picking up, and that's pulling gamma neutral down really, really quickly at the money and just out of the money. And then you're seeing puts being sold really heavily, and that's pulling Vega neutral down. And you're seeing out of the money positioning, like sold calls and stuff, kind of closing. And the concentration of that out of the money gamma moving also closer to spot, which is all of this is all the neutrals moving down is generally bullish. But especially if spot is below those neutrals. But even if it's above, it's still pretty bullish. But like within all of those, there's just tons of information to unpack about positioning at those levels and how things are changing on the totality of the chain.
Yeah. Okay. Yeah, that's the I guess that's the level I'm trying to get to is, from just looking at a snapshot of this to get like a good understanding of where positioning is for a particular equity or index.
Yeah. And also don't forget, like, you have your exposures too, which are giving you a lot of information as well. As total gamma on the chain moves more positive and the adjusted delta starts to turn up, all of that adds to that analysis as well.
By exposure, you mean like just like which one?
The DEX and
Those two bottom lines.
The two bottom
Oh,
boxes.
okay, yeah, okay.
Which you have a scanner for. Shark fin.
Yeah.
Hoo-ha.
So you can find,
I think you mentioned.
what's bullish.
I think so. I mean, if you say bullish, like on DEX, right? It also affects the GEX ones. It changes, like on the right too. So,
but it just tells you what the changing gamma is for the sorted DEX list.
I see. Okay.
So like Amazon's
you can sort it though too. Like you can also
you can sort by
both
GEX
lists.
too.
Yeah.
And then that'll show you by delta, to the left.
Yeah.
It just lines up the the stock.
Yeah, I
that
see.
you're
I see.
looking
Yeah, the
at.
one you're interested in, yeah. And we're up to what now? 800 stocks?
Damn, look at that fucking bump in Delta on Tesla.
Yeah,
Tesla's going on the moon. One sec.
why? I don't get it. Other than where's JFresh, dude? Did he leave?
I
How
think
did I
so.
not catch that? Well, in any case, yeah, fucking Tesla's stupid. But JFresh had a great analogy of Elon. You know what? I'll wait for him. I'll wait for him to say it on the Sunday stream because he described it the best. So I'll have to make a note of that. But yeah, the whole thing is wild. So did we? I know we got really long winded there, but did we help you out with your question? Like at least
Yeah.
help you think more about it.
It definitely like it's clearing some things up, and it's just like going through it, like just burning it into my brain basically.
Oh yeah, don't drive yourself nuts, but definitely check out the docs. Right, give them a read while you're on the toilet. They're a great resource, and particularly the exposure hedging section, I think, will help shed a lot of light on this for you.
Okay, cool. I took up a lot of time, so thank you very much.
No, yeah, absolutely. Thanks for coming on. I think they're exciting. Oh, you had to go do dad stuff? What a lame-o. I'm not looking at YouTube chat. I hope there's no questions. I'm gonna look. Is J-Pow, you asked me specifically, is J-Pow staying or going? I don't fucking know. How can one use the call versus put premium? I don't know. It's how much people are spending on calls and puts. People spend more money on calls than they do on puts, than they spent more money on calls than they did on puts. Gherkin uses it. I don't know how. I'm not that sophisticated. I ate orange chicken tonight, which tells you my level of sophistication. I use the Panda Express orange sauce as well. Once again, to reinforce that level of sophistication. Someone was asking about call and put premium, and I was like, I don't know how to use that.
Oh. I don't know if it just tells you, like, it gives you an idea of, probably gives you a pretty good idea of boughtness or soldness of options overall.
It could, yeah. What's up, Fear? What do you got? Is he going up here without a mic?
Well, thanks for popping up anyway.
Too bad there's no soundboard in here.
So did he just like hop off and then you were just talking about orange chicken?
Well, no. Someone asked about the call and put premium, and I said I think Gherkin uses it, or I said Gherkin uses it in some sort of weird fucking way. But
Well,
I want
it
that sophisticated.
We're gonna plot it, so
yeah. I mean that sounds a lot better than just having a number.
yeah, we
Hey,
will plot it eventually. What's up,
Long
man?
What's up, Nuke?
First time caller.
Yeah.
I just have one really important question. Why is the real time data so fucking sick? Can you answer on that?
Well, Nuke, our full stack developer has managed to take farts and
You
rainbows
don't have to answer it. That was my question.
and put them in a bag together and come out with a unicorn, and then real time data was then shat out by the unicorn.
Yeah. Yeah, it's pretty cool if I had to say so.
It's so fast now. Like, I hope everyone who's been using it has noticed how snappy it is and how timely the data's coming in.
Carl says it's sexy because Dork hasn't touched it.
Oh, Carl.
Yeah, I mean,
only you know.
if I knew the engineer who single-handedly built this, he would get one hell of a pat on the back.
My shit
Yeah.
break a rib. That's a hard pat. I'm just kidding. All right, I'm gonna go watch TV.
STD slot machine's offering to tongue kiss you. And apparently you could also have Carl's wife 100 pounds of steak and 10 gallons of lube. I assume for the steak.
I don't know what to do with that. So, I'm gonna go unpack.
You'll
it
watch
tonight
TV
when I'm
with
trying
that
to
in
go
your
to
head.
bed. Yeah, for sure. All right, that's all. See you later.
Thank you, Dick.
All right, so Fear and Loathing in Las Vegas says, could you do a walkthrough or explain like I'm 5 of the bottom charts for live data? It seems like Gherkin uses it a lot during the day to see where price action can go to, but it just goes over my head. All right. Well, over here, I mean, I'll be honest, I'm not frequently using put call volumes, but it is nice to see the concentrations at different strikes, especially if they're not evenly distributed. So if you have like a very high concentration of calls versus puts, or a high concentration of puts versus calls, that can offer up some information. Mostly what I'm looking at over here throughout the day is, that IV line, which is flat right now because it's the overnight session. But I'm looking at that IV line and I'm looking for shifts in that line, right? So, let me do it like this. If you just have a perfect curve through all this, no, that's not perfect at all.
That was a pretty good one.
Ugh. So
That's
you just have like
fine.
a perfect curve through all the strikes, and all of a sudden this side starts shifting like this, and it looks more like a straight line up instead of a nice rounded belly curve. And you're getting spikes out here in IV. This is probably telling you, that IV is kind of skewing a bit to the downside. It's becoming more of a smirk. And this gives you a lot of information about what's going on with out of the money positioning, because if you're selling options, IV is going to come down. If you're buying options, IV is going to go up on a per strike basis. And so this can give you a really good idea of like where interest is coming in, what kind of interest is coming in at that strike, and then you can look and kind of see, is that weighted on the call side, is that weighted on the put side. You can even mouse over the volume and watch it while you're watching, like say that strike gets a big spike on it, and you mouse down here and you're watching, our calls picking up, right? Our calls or our puts picking up, and what's going on, and that can kind of tell you like pretty definitively like what's occurring there. If you're seeing put volume pick up and vol on that strike is also moving up, it's a pretty good indication that puts are being bought there. And sometimes this happens pretty quickly, sometimes not. But it gives you a lot of information about price, and what's going on with options pricing. And when options price up, there's a pretty good indication that those options are probably being bought. Whether they're being bought to close or sold or bought to open doesn't really matter.
The puts or calls.
Yeah. But so that's usually what I'm watching here. And then over here, I'm looking at the various gamma levels, and I'm kind of trying to figure out where there's going to be support and resistance based on the total gamma exposure. It's kind of like what I was talking about earlier when I did like the little diagram with the various curves, and I was trying to show how price moves relative to the weight of each of those, the weighting of each of those gamma curves on the market maker's total dynamic hedge, and how smaller amounts of gamma can act as like velocity that adds to momentum, and big blocks of gamma, or if you want to go a layer deeper and go out here and look at the delta, like big blocks of delta can act as support or resistance. And we kind of saw that at the end of the day today with 75 being like a really significant resistance before it broke out, and then 5500 acting well, actually I think it was like 90-95 acted as the resistance to the upside, because the gamma like kind of falls off there, and then sensitivity at the 85 strike is it's more prone to move down because there's a higher amount of sensitivity because it's more heavily weighted. And then, very similar with delta, except you're looking at the raw value instead of the derivative.
Yep.
Yeah, that was explained like I'm a 24-year-old college graduate. That was pretty good.
Yeah, I think that, put more simply, right, like the right charts show you how much trading and what's the relative price, and then the left-hand charts tell you what's the market maker exposure.
Yeah,
like that's, I mean, and then gamma, the orange line, like the little bell curve guy. That's the thing I was talking about, right? That bell curve is, it's a pretty cool looking thing.
yeah,
So check it out. Watch it evolve through the day. It's pretty neat.
it does some cool stuff.
But yeah, and Gherk went into depth, but gamma itself is just how much is delta going to change if the stock moves by $1.
So when you say puts are being
that's what it
bought, is that participants buying them and the MM is selling? Yes. Yeah, that's why the IV on them is going up.
Yep.
If it were the other way, if the IV were going down, then participants are selling that contract.
Yeah, think of it this way. If there was a lot of demand for a product, you'd raise your prices. If there was a lot of demand to sell your product, or if you were buying a product and there's a lot of people selling it, you would lower your buy price, right? That's what you're seeing happen in the market with IV. It's supply and demand.
Yeah, and so I know a lot of you guys have been watching the stream, and this is our newest feature, is the live data page, and we now have for the beta participants right now, we now have SPX, SPXW, QQQ, SPY, IWM, Tesla, NVIDIA, so on. Everything across the top bar there. All of these have live data with the left side of those tabs having actual 0DTE contracts, and then the equity side having weekly contracts, which does
the next
change
contract
things.
that's expired.
Yeah, the next available contract. Weekly or monthlies.
Yeah, whatever it is.
And so, Nuke's been building this pretty much 24/7 for the last 3 months now. And
I think it's been since Christmas. He's just been on this thing.
Yeah, almost actually. Yeah, I think it was like right around the turn of the year. And I don't know how to laud it enough, because on the user side of things, it's definitely like, oh man, this works like it should. But the amount of effort and ingenuity to build this and keep overhead down and make it as efficient and be able to hand it out to multiple users at any given time is nothing short of amazing. I have seen teams of engineers at funds try to build something similar and not come anywhere close to a functional product. So big shout out to Nuke getting this implemented and getting it hooked up. And this is going to go a very, very long way towards us building even better live data tools and more robust models that are going to benefit all of you guys. So yeah, really, really, truly outstanding. And he's not listening right now, but hopefully I can.
No, I hope he's watching TV. I hope he's not listening because he deserves some TV.
Yeah,
like I've been,
hold on, and
Okay, continue sucking.
yeah, even with all of that, I do have to also say that something else came out over the last couple of weeks that you guys might not have noticed. But Dork has been working on his magnum opus V2 for 3 times longer than Nuke has been working on live data, and V2 has been implemented in the production version of the product. 6 years, yeah. Started before I knew him. But it is now implemented, and that is going to be huge for a lot of the outliers that we were having problems with. It's a significantly more robust system for the back end, and it's going to make modeling things really a lot easier moving forward, and we're going to be able to spin up new things very quickly. And no one ever gives Dork credit for anything he does because we always give him shit. But Dork, you did a really good job, man. I've gone back and
Thanks,
looked at
dude.
the neutrals on a lot of things that were super fucked up, and you've really fixed so many outliers, and it's fast as fuck, and you did a good job, man.
Thanks, dude. Yeah, she got a facelift, a good one too.
Yeah. And yeah,
And don't worry,
you guys don't see any of that, but it goes so far in ensuring the integrity of our data and our models, because they're all built off of these fundamental layers. And for you beta guys, you made building all of this possible. So I hope you're enjoying using it.
Yeah, for sure. Like this is we built, all of this data that you're seeing from the most fundamental layer we possibly could get our hands on. And it's all thanks to you guys that we're able to continue to do it.
Is real-time data live, or is my page broken? If you're not in beta, you don't have the like real-time data. You have live data, but it's like on a 5-second delay, roughly. Like price will update every 5 seconds. I think the options chain updates a little bit faster than that, but this is like a raw WebSocket. Like this is as
you're
fast
getting a
as,
straight pipe to
yeah,
SPX.
this is like as fast or sometimes faster than TradingView. WinV4. He's also working on that too.
The thing is I'm just trying to work towards like and I want to bring this back and suckle on Nuke a little bit too. Like, I mean, yeah, what he has contributed with this real-time data service that you guys are getting access to, what you're seeing is just the beginning of what he has built. Like this is not, he didn't just build these features, right? He built an entire infrastructure around how this works that is going to make putting new features in, getting those developed and tested and everything. That whole process is just, it's beautiful, it's clean. It is the most, I mean, I don't have a ton of experience with straight up software engineering, but I have a lot of experience with people making things and me looking at things people made. And I can tell this thing just oozes quality out of every pore.
Yeah, no, I've worked with a lot of market software, and it's fast as fuck. And what we're kind of doing behind the scenes, and I know it seems a little slow right now, is we're kind of building the factory, and then once we have the factory all built, we're going to set up the assembly line, and we're going to be able to churn out new features and new models and new data so quickly.
We got a massive roadmap for it too.
Yeah. I have inundated Dork with hundreds of new features, so it's only going to get better from here. So I hope it's I mean, it's already really good so far.
It's just gonna get so much, like, we're gonna start running out of real estate on the left hand side of the page pretty soon, and we're gonna have to start getting into like, now we need like some sort of a portal of some sort because there's just so much stuff.
We'll just create like submenus.
I was thinking it'd be like a video game where you're like in the main menu and you pick like your,
when we institute the new front end stuff, we'll just have a drop down, and you can. Well, everyone will be able
Dude,
to see
it's
that when it
so cool.
happens, huh?
Yeah, this is all just so cool. I mean, being able to be a part of this, like, it's fun. It's fun seeing this stuff come out, and like
We're gonna crank
the cool
softcodes
thing we
so
built with what
fast
we
it'll
have so
blow your
far.
mind.
Well, yeah, JFresh has been working on some really cool stuff too.
Yeah, none
I
of
mean,
which we're giving anybody.
let's,
But
yeah. Well, okay, so hold on. We praised Nuke, you praised me. I gotta say really quick that JFresh is the brains behind the math operation here. He's an absolute genius. Not a day goes by that I don't take him for granted because, or that I do take him for granted because he without his guidance, I wouldn't have been able to understand this stuff to the level that I do. So, you know, when he speaks about the options market, I listen. So
unless he says it's
wanna
going
throw
to
that out there.
6,200, and then
Okay. Obviously, you take it with a pinch of salt because he's taking it with a pinch of salt. But yeah, he's definitely, when it comes down to it, he knows what he's talking about for sure.
it's turning into a dick sucking contest.
And hold on, while we're here, I got to talk about this guy Carl. Okay, he's an absolute motherfucking fuck.
Oh, fucking!
Okay.
What would we do without
I
Carl?
just didn't want JFresh to be left out. I knew he might quit if he didn't hear something about himself.
Carl's out.
Thank God. No, I'm just kidding, Carl. I do need you around. You did something for me tonight, and I appreciated that. There you go. There's your praise.
I need to get you guys on stage, like you, Nuke, and JFresh, and then I need to go away so I can listen to you guys praise me.
You can't be here for this. I mean, I mean, I don't even know. Like, the thing is like, giving credit where credit is due for you is just the proof is in the pudding more than anything else. I mean, just look at this site. You know,
it's come a long way. God, you remember?
You just need to like look around, right? I mean, like, that's like, it really is like, you know, it's very apparent.
Do you remember, Dirk? Do you remember the first the brine?
Oh yeah.
Back when we would sometimes get this shit updated every couple days, and every time we updated it broke.
Yeah, it was bad, and that was when I was working on like the baby stuff too, and like we were like, is it even possible, like, to do it at this scale? And I made it barely possible. And back then we had like it was when we were first starting out, it was like 300 tickers, if that, maybe less. And it would take like something like 2 hours to just run end of day data.
JFresh used to have to stay awake every night and run overnight data for us to have an update, and his spaghetti code kept getting worse and worse, and so it would take slightly longer every day to run it, and that went on for 2.5 years.
Dude. I had to copy that.
I know.
Yeah, no, the further I got away from that, the more performant it got, but it really was just taking it and doing what it did.
I remember the bitching about that. Yeah, JFresh used to fucking bitch every day. He's like, well, I don't know what you guys are doing, but I'm updating the fucking data, so I can't go anywhere.
I forgot about how fucking salty you get about it.
Oh, that's so funny. Oh man, yeah, been a long road.
Well, Fear Loving, I hope we answered your question.
Yeah.
Got off on a tiny little tangent here.
I forgot he was still in there.
Jesus. Yeah, no, yeah, to sum it up, get stoked about real-time data. It's here. it is really cool, and it's not just really cool for what it is. It's really cool because of the implication.
And
Okay.
we are. I know Nuke's coming in and patching it every day, and getting the fixes and bugs worked out. And we're gonna try to get it pushed out to production as quickly as we can. So it'll
Yep.
be in everybody's hands. And for the beta guys, thanks for dealing with all the bugs and issues while they're there. You know, that's why you guys get that's why you guys get a discount.
Right. Yeah. I mean, and honestly, the bugs that have been happening have been like just little quality of life things, like, oh, I had to refresh the page. You know, no more. It's gone, but like it's just little shit like that.
Yeah, no, it stayed up and running all day today. I didn't have a single issue.
Yeah. No, and the equities were looking good.
Yeah.
Like this is really looking nice.
Is it doing overnight trading too?
Every once in a while I see a little something show up, but
Well, like
I think
the options data
only
moves in the overnight session, but the price isn't. We're not updating price yet.
Yeah, I mean, well,
I think we have to
like,
pull
how
a
do you
different
update price
feed
then?
for that, but we'll figure it out.
I mean, yeah, we just got to hit up Vlad Tenev and get a pipe into his data feed.
No, we have no like pre-market and after-market hours.
Yeah, I know. Well, we got to get into his 24-hour trading, you know, and be
No,
like, yo,
we'll deal with that later.
yeah,
Anyway,
true.
I think that's enough for tonight. I'm tired.
Are there any more questions? I'm delirious. Time for me to go play some Oblivion.
Oh God. Can I or can I not run it on my Samsung washing machine?
You probably could, and no, you can't do the remastered on the washing machine. You can only do the original. The remastered is in UE5, so the graphics actually kind of make your stuff chug a lug for a sec.
All right.
But if you get it on PC, people have figured out that you can mod it, so there's going to be a modding community within the next 2 months.
Yep, that sounds about right.
So yeah, I mean, and there were a lot back when I played it back in like 2010. There was a lot of QOL mods that came out. They're probably going to come right back out.
All right.
So if you're into RPGs, which I am when I'm trying to not be super intense because I'm tired.
I just can't. I don't know if I can pick up another game full of fetch quests and complete them to no end.
Well, this was, I mean,
I played
Oblivion's not too bad.
I played Oblivion like originally.
It's not as bad as Skyrim in that regard, though. Like Skyrim's like raid the tunnel, get the treasure, leave. Like
Yeah.
it's so easy to become like a millionaire in Skyrim compared to like Oblivion. At least you're kind of like having to be a little more judicious with your shit.
I feel like I remember playing Oblivion and just being in perma sneak and shooting everything, like one-shotting everything with arrows.
Oh, right now I'm doing because I wanted to play the game again. I just went straight for stealth build. I do stealth dagger.
Nice.
And you basically one-hit kill everything. But at least with stealth dagger, you got to get in their face, and you usually end up in the middle of a fight. If you like face a group of enemies, you can't really like get around it. So there's a little bit of challenge. It's worth it,
Right.
at least in my mind.
Well, I'll let you get to that. Thank you guys all so much for tuning in. If you want to check out Gammastrike, you can visit our website at app.gammastrike.com, where our documentation is available free for you guys to read through and study. Even if you don't get the platform, you can learn a lot. So have a great night, everyone, and we'll see you next week.
Thanks for having me on, Gherk.
Thanks for being on, Dork.